highlights at the consolidated level. For the third quarter ended financial year 22, the operational income stood at 90 crores. EBITDA for the quarter was approximately 9.8 crores and EBITDA margin stood at 10.88%. The net profit was reported at 1.9 crores at a PAT margin of 2.07%. For the 9-month period ended December 31st, the operating income was 288 crores. EBITDA reported was around 27 crores. EBITDA margin stood at 9.42%, while the net profit was at 3.2 crores with a PAT margin of 1.12%. As is evident from the financial results, I am happy to share that we continue our recovery track in Q3 as well, as seen in our improvement in both PAT and EBITDA levels and margin levels. For the third quarter, digital media revenue stood at 48 crores, which were up 19.4% year on year for the 9-month FY22. The digital media revenue stood at 135 crores. I'm very sorry, I'll repeat this. For the third quarter, digital media revenue stood at 48 crores, which are up by 19.4%. And for the 9-month ended FY22, the digital media revenue stood at 135 crores, which is up by 20% on a year-on-year basis. Traditional media revenue for the third quarter stood at 42 crores, which was down by 12% year-on-year. And on 9-month basis, it stood at 153 crores, which is a growth of 26% year-on-year. Although unlocking resulted in green shoots in the economic revival post-COVID, media consumption slowed down across traditional and digital platforms. Large advertisers are facing a triple threat of rising input costs, slowdown in rural consumption, and looming fear of countrywide lockdown, all leading to cautious advertising spends across channels. Despite challenges on both viewership and advertiser spends, the company has maintained positive margins during the quarter. As most of you are aware, the company has been in an investment mode in various new initiatives. Hence, it is important to note the expenses made on these new initiatives net of revenue for the periods under review. For Q3FY22, expenses on new initiatives net of revenue were 20.7 crores and for 9 months it was 53.2 crores. If you were to adjust for these investments in new initiatives, the adjusted EBITDA from existing operations would have been approximately 31 crores for Q3FY22, and for the 9 months ended Q3, the adjusted EBITDA would have been approximately 80 crores. On Shemaroo platform, under Shemaroo Gujarati, we released 13 new titles during the quarter with content across movies, web series and plays. We also released our original web series Yamraj Calling and Benaqab on our Shemaroo OTT platform, which have been well received by the audiences. We've also released the theatrical blockbuster Dhuandhar. On YouTube, we crossed 57.7 million subscribers on our YouTube channel Filmi Gaane during the quarter. The channel continues to maintain its foothold as the 20th most subscribed channel in the world. We have also got into a strategic partnership with Spotify in the quarter for Srimad Bhagavad Gita podcast. On the broadcasting front, increase in out-of-home mobility on account of unlocking and the festive season affected the overall television viewership. However, Shemaroo TV continued its upward trajectory in ratings, while Shemaroo Marathi Bana's rating remained steady during the quarter. Shemaroo Marathi Bana premiered the Marathi dub version of Bahubali with noted Marathi film and theatre personalities lending their voices. Lastly, we also launched a new DTH service, Classic TV, on Tata Sky in December 2021. To conclude, although Omicron had a temporary disruptive impact on the economy and subsequently the media sector, we remain confident of our recovery trajectory in the coming quarters. With that, I open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Viraj Mehta from Equirus PMS. Please go ahead.
Yeah, good afternoon, Hiren bhai.
Yeah, good afternoon.
Hiren bhai, my first question is on new initiatives.
Yeah.
Our run rate of loss was 16 crores a quarter roughly, which has now gone up to 20 crores a quarter. I thought that this was going to come down, but in spite of revenues going up in new initiatives, the loss just keeps going up. That means our investments in this are going even higher. Where do we see light at the end of the tunnel?
So I would say that the one major area where we ended up spending additional in this particular quarter, actually I would say probably in the last more than 3 months, maybe 4 or 5 months, has been the Shemaroo Gujarati rollout, where we've invested heavily in some of the web series as well as the attending marketing and advertising costs on that front. So that has been one of the areas that we have, the spends have gone up. On the other hand, while there was a overall expectation that the television investment on the other hand would come down, it has kind of stayed steady or in a similar zone where it was. Because primarily one of the big reason for that was because we in this quarter we premiered this Bahubali, which was obviously a large cost item, which both on the content side and the marketing front. So there was an additional spend on that account for on the broadcast front. So therefore that kind of in this quarter there was an additional investment, I would say, on content and marketing side.
And that is likely to continue, or will we see that taper off back to 15-16 crore loss a quarter?
We are hoping that, as of now, we definitely are hoping that in fact it should be coming further down. But yeah, first target obviously is to bring it below 15-16 quarters and subsequently to bring it down further.
Sure. Sir, my second question is, if I look at the employee cost, on quarter basis, it has grown by 3.5-4 crores. Is there any one-off item there, any bonus there, or this 20 crore is now the run rate for quarterly basis for employee cost?
No, I would, 1 second, I'll tell you, I would rather look at the 9-month cost, for reason being, during this financial year, we paid out all our performance-linked incentives, etc. in this last quarter, and in the previous financial year, we had paid it out in the Jan to March quarter.
Okay. And can you talk about a little bit about, Hiren bhai, where are we in terms of breaking even Marathi Bana? Because last time on Concall you said that by Q4 we should be closer to breaking even in Marathi Bana. So where are we there, and where are we in terms of Shemaroo TV?
So, okay. At this point, the overall broadcast business in terms of operating metrics has been better. So the ratings on Shemaroo TV in fact have grown more than 20% during this quarter. So viewership and over TRP overall has grown by more than 20%. Marathi Bana actually has remained broadly stagnant. One of the reasons also is that there was one new channel launch in Marathi, which was Sun Marathi, which launched in October. So we have held our ratings in the light of a new entrant. So to that extent, that recovery has actually been a little bit delayed. But the good news is that Shemaroo TV, which is a bigger revenue pie opportunity, has actually grown and if we see almost last almost 6 to 7 months, we've grown quite well on Shemaroo TV, and we are hopeful that over the next 2-3 months that will translate into the revenue advertising, rates kind of going up. And if I have to overall look at this business, based on where things are today, I think we are fairly confident that these 2 channels business, we should be breaking even in the next financial year.
Okay. No, that's very heartening to know that we'll be breaking even both these channels next financial year. Sir, just one last thing.
Yeah.
If we look at our digital media, we are roughly between 45 and 50 crores a quarter, right? And so hopefully we grow on that a little, and that being a very high margin business. And your loss from your new initiatives, you're saying should come down substantially from probably 15 crores a quarter to 10 crores a quarter to at some point breaking even. Should next year be the year where we, the shareholders, see at least 20-30 crores of profit, or that seems like a long way away?
Well, I am not in a position to give any forward-looking statement, but what you are saying, has been our endeavor, and I think we are, definitely working on that, on those lines. In fact, we were this year actually this, Delta variant actually threw a lot of things out of gear, kind of a thing. And in spite of that, I would say that this 9 months we've kind of held well, funded everything out of internal accruals, reduced leverage. So we've generated, actually very strong internal accruals, which has helped to, fund all of this put together. So in that sense, if, like I said, I'm sorry, but not able to give any forward-looking statement. But yeah, that would be our own effort also.
And what will be the debt today, Kiran?
Debt, it's held at the September level. September was 247. We are at 248 crores.
Okay. I'll come back in the queue, and best of luck.
Yeah, thank you.
Thank you. The next question is from the line of Shika Mehta from Q3 Capital. Please go ahead.
Hello, sir. Good afternoon. I have a couple of questions. So actually today in the Economic Times, there was an article about how ad expenditure has increased by 37% year on year and 10% since 2019. But we, even in our opening remarks, have mentioned that there's a triple threat and which is causing ad expense to reduce. And even in our numbers, we've not witnessed any sort of improvement even since 2019, and quarter on quarter also our top line has reduced. So if you could just throw some light on that.
Firstly, I think what is more important to understand is that our businesses, our revenue, if we were to put it, is actually has 3 components to it. One is what comes from subscription-based business, what comes from advertising-based business, and what comes from syndication.
Right.
So if I actually were to look at the advertising-based component of it, it's probably grown in that line itself, because last year the base effect was there, right? We had a low base due to last year's COVID scenario.
So we're saying our ad has grown north of 30% from last year, our ad revenue from ad?
Yes. The business which is dependent on advertising directly or indirectly, so television, net channels or YouTube, etc. If I were to look at those businesses, we would have grown definitely upwards of 30%, or probably in line with the industry also. But it's the other businesses. So, for example, one of the things that we also discussed is the fact that the unlockdown during this quarter, or actually post August, September, has led to increased mobility amongst people, and it has actually reduced media consumption overall.
Sorry to interrupt you, but during the lockdown, when there was higher viewership, that time we didn't benefit from it. So
advertisers pulled out, right? The advertisers pulled out. Let's separate two things. There is consumption and there is advertising, right? Now, consumption has impact on two parts. Advertising is one part, and subscription or pay revenue is the other part. Okay. Now, what I am saying is that when there was a lockdown, advertisers pulled out and the overall ad revenue came off, which was in 2020. It happened significantly in the first 5 to 6 months of the lockdown. We were down, overall by anywhere between 60 to 80%, and then slowly it clawed back. 2021, because of the low base effect, that revenue actually grew significantly, right? So that is one part of it. Now, when we come to the pay revenue aspect, that's what I was saying, that because of the unlockdown as part of it, the pay revenue actually has been stagnant or probably even degrown to some extent during this quarter, because of the fact that there is a lot of unlock movement of people who then therefore don't have enough time.
So, sir, to just understand this better, could you give a breakdown of how subscription has done, how ad has done, and how syndication has done? Because right now it's seeming a little murky.
What I'm trying to tell you is that, our overall top line has grown by 23% during the 9 months.
Right.
Okay. Within that, the advertising-led business has grown by upwards of, probably it has grown in a similar range of what you are indicating for the industry.
So around 35% or upwards.
35% plus.
Right.
Okay. But the subscription-led business would have probably degrown to an extent, and that has pulled down the overall average down.
Okay. And so same with syndication.
Syndication may have been probably marginally higher than last year, because we definitely had, but it's not at that scorching pace of 37%.
Right. Okay. And can you give me a broad breakup of our revenue between ads?
No, I also myself wouldn't have. We don't look at it that way, honestly. So, but since this question of advertising revenue has come up, I thought that this, even I saw that article, and when we dug deeper on that, this was the, and kind of we compared it with our own business, and what it says is broadly correct, that advertising revenue would have, on a year-on-year, on a low base of last year, has grown by maybe about 37 odd %.
Right. So not only on the low base, in fact from 2019 also it's grown by 10%.
By 10%, yeah. So
right.
You're right. Yeah, also,
not just the low base, correct?
Yeah. So it is not, if we see from 19 to 21, it's a low growth, right? Because the last year was a low base of 37%.
Low base. Right.
But having said that, that 10% what you are saying, or what has been quoted, or 37%, that's something that we have also experienced.
Okay. And so if you could just throw some light on our traditional media business as well, because we're not growing at the pace we'd want to be growing at. And my understanding would be that a lot of the channels, etc., would need to acquire new content because it's been long overdue.
Just to give you a sense, actually, for this 9 months period, while digital media has grown at 20%, traditional media has actually grown at 26%.
That is again based on the low base.
Ms.
Right?
Mehta?
Yeah.
Ma'am, sorry to interrupt, but we have participants waiting in the queue for their turn. You can just finish your questions and then come back in the question queue.
Yeah, thank you. Hello?
Yes, ma'am. You may please proceed with your final question.
Yes, sir. So if you could just give some, the traditional media growth of 26% again is due to a lower base, right? So, I mean, can we maintain this growth of 25 odd percent going forward? Are we seeing some sort of improvement?
So overall, traditional media has kind of seen a better growth this year, which is reflected in this number. Now, right now, very difficult to comment on how it will close for the full year, but we are confident that it will maintain at least for this year at least. And yes, because of the low base effect also, because otherwise the traditional media normally has always been single digit, high single digit or low double digit kind of a growth business. So considering the low base effect, we hope that it will maintain the growth as of the digital in any case. So that is a higher growth based on the fact that there is a low base.
Which means overall also we'll be looking to grow at around north of 20-25%, right? If both are growing at a similar pace.
I'm unable to give you a forward kind of statement, but the point I'm making is that for this year, FY21-22, the current year that we are seeing, we hope that traditional media should be at least the similar growth of what digital media is, if not less than that.
All right. I'll come back in the queue.
Yes.
Thank you. Before we take the next question, a reminder to the participants, please limit your questions to 2 per participant. For any follow-up, may we request you to rejoin the queue. The next question is from the line of Dhwanil Desai from Turtle Capital. Please go ahead.
Hi, Hiren. Am I audible?
Yeah, hi.
Hi. So Hiren, one thing I wanted to understand was on the traditional media. I understand you may not be able to give exact numbers on 3 different streams, but at least give us some sense in terms of how large is the syndication business, and QOQ we have seen the decline in revenue. So is it largely because our syndication business has gone down, or how should we look at that?
Yeah, so syndication business is a deal-based business, and to that extent, that has been affected in the Q3. So that is in a way combination of cyclicality and seasonality kind of a thing. And unfortunately, I'm not able to give you a color of what is the size of that business, but it has definitely been, so last quarter and I've mentioned it also last quarter that this was led by a few satellite syndication deals.
Right. Because, Hiren, to be very honest, one problem that we as an investor are facing is that we have pumped in 180-200 crore rupees in new initiatives, but we hardly have a clue as to where that business is going, right? So, in terms of numbers, whether broadcasting, viewership, whether revenue, so give us some sense on that. I mean, otherwise, we are almost groping in the dark. It's a black box for us. So, I feel it's important for you to at least give us some sense as to where the things are moving.
So I have in fact given to the previous couple of questions that came up, I actually shared this thing also that what has happened with the ratings and all of that. And what I would like to just add over there, or even something which I shared, is that as of now we are quite confident that it should be breaking even in the next financial year, that business.
Okay. So you're talking about the TV channels, right? The Shemaroo will still remain, we'll continue to spend money on the Shemaroo.
Shemaroo is likely to remain in an investment mode for next year at least, is what the way we are seeing it, because that opportunity in terms of when it matures is still some time away, and I'm right now, I mean, we all hope that it happens faster, but more importantly, if you understand what we are doing or building is really the strong direct B2C business over there, where the connect of the brand in the core audience of our offering is strengthening with each new offering because of obviously the content, but equally importantly the attached marketing and brand building, etc. that goes along with it, and that in a way is helping us create a very, very strong position in that core audience, and definitely I'm it in a way increases the I would say the entry barrier also, and helps create much more loyal audiences, which kind of results into a repeatable business on a month-on-month basis. So that's the nature of that business, which is a subscription driven business. Santi, you want to add?
Okay. So, I mean, the point I wanted to understand was that 15 crores average quarterly in, investment in new initiative post break even.
Yeah.
Will it go down substantially to 5-6 crore, or will it, we'll continue to take that, whatever was given to broadcasting channel and pump it into Shemaroo? How do you think about that?
Okay, I'll put it this way. So the way we are looking at the business is we are looking at what is our cash flow generation on a month-on-month and quarter-on-quarter basis. And out of that, we kind of allocate the investment to various businesses. So one is we are very careful about ensuring that we do not invest more than what we are generating, whereby we may then need to go and borrow or something. Secondly, what I can say is that even within these businesses, based on what is the real potential, finally we have to derive an IRR on this business, and what is the actual real potential of these businesses, and the investment will only be based on what is the available scale or potential of this business. I cannot, supposing for example, if the business is going to be 100 rupees top line, say 3 years from now, and today supposing it's at say 10-15 rupees or even 20 rupees, and that's projected to go to 100 rupees. Now I cannot go and invest 200 rupees to generate that 100. So keeping that view or discipline is something that we have been mindful of. So while I'm not able to give you a number, what I'm just trying to share with you is the philosophy or the directional aspect. And yeah.
Okay. So last question from my side. Even one thing, so like you broke up traditional media into 3 things, and even without giving numbers, you gave us some sense as to which part of the pie is growing and which is kind of stagnant, and where the degrowth is. Similarly, on the digital side, if you give us some sense, so Shemaroo of course must be growing. So between YouTube and the OTT syndication, the growth rates are equal, or one of them is more kind of towards the...
YouTube has grown faster. If I had to just answer in one time, YouTube has definitely grown faster on revenue because digital advertising has been on a fast growth mode.
Okay. Great. Thanks. I'll come back in the queue.
Thank you. A reminder to the participants, please limit your questions to 2 per participant. The next question is from the line of Rishikesh Oja from Robo Capital. Please go ahead.
Hi, sir. So my first question is, as you mentioned about the traditional segment growth at the similar side of the digital on low base. So basically, would it be fair to say, that the traditional segment recovery would happen somewhere in 1.5 years?
Yeah, I mean, we are hopeful that. So, 2 things I want to highlight here. One is that, if the as and when the times normalize. So, as I even said in my opening remarks, that we are all looking forward to a very temporary disruption from Omicron. If we don't have any further challenge on the COVID front, that's one part. I mean, if that happens, I think the economy overall is on a fairly decent growth path or a recovery. I mean, it's probably many sectors are beyond just the recovery part, but overall at an economy level, we would be on a decent growth path, and that definitely will translate to an overall ad spend growth, and that will have a impact on the traditional media's recovery. Second thing, what one needs to understand is the broad change in the business model that we have been working over the last couple of years, whereby the dependence on B2B businesses, which is the syndication business, actually we have consciously been bringing it down, increasing the presence on B2C through television channels, which helps us create a much more recurring revenue, a more stable, predictable revenue stream, and a much stronger brand connect with the audiences. So that is something that is in kind of, I would say, it's work in progress. But I mean, I would say we've come a fair way along that path, and we now see a good light at the end of that tunnel. So I'm hopeful that we should be in the earlier than the time frame that you have mentioned.
Okay, that's great. Okay, and also my second question is, for how many years are you going to fund this new initiatives? Like, will we keep on funding for maybe 2-3 years, or like when will you pull off that plug of it?
So each of these depends on the ultimate outlook of that business, right? So if something is today at 20 but expected to go to 100 in a 3-year time frame, then it is likely to see an investment, continuation of the investment, and even though it may mean that we have to probably, we need to invest heavily if we have to reach that stage. Versus if something doesn't have a potential, we actually pulled the plug on many businesses where the potential was not there. So I can say one thing, that we are not scared of pulling the plug on businesses. It's more importantly where it fits in strategically, what is the potential of that business, and how we are on the execution curve. So I think all three, if we look at it, that's the combination. There are many factors that go into that decision, but I can easily say that this is a continuous review exercise that we do literally on a month-on-month basis on where we are, which is why, in fact, even to the previous question, I highlighted the whole philosophy on how we decide on what is the cash flow limit of investment and things like that.
Okay.
Other way to look at it is the digital dividend that we're seeing today is a result of a lot of investment that we did in the past 10 years.
Yeah.
All right.
Okay.
Thank you for your time.
Thank you. The next question is from the line of Rahul Jayantilal Jain from Credence Wealth. Please go ahead.
Hello.
Yeah.
Thanks for the call. Thanks for the opportunity. Even just to go back to this employee cost, last 4 years, we have seen a sharp jump in the employee cost. Typically, 4 years back, it used to range in the region of around 30 crores or lower than that. And from 30 crores in FY17, it's gone up to 40, then 55, then 68. And last year, March 21, it was roughly 59. And current year, what we are observing is, again, you are already reaching 9 months, 52 crores. One of the previous participants had asked about the increase in the employee cost for this quarter. So even when I compare this 9 months compared to the previous 9 months, the number is higher from 47 to 52 crores. So we had this recent resolutions with regards to employee stock options and increase in salaries for key personnel of the company, the directors and the key personnel. So going forward, how do we look at this? Is this 20 crores going to be now the run rate going ahead? How is it going to be? And how do I look at the employee cost? Are we done with the major additions which we required for our various new initiatives, and somewhere this employee cost can become stable now?
So, what I was trying to explain also to the previous caller, maybe I didn't come across in the right manner. 47 growing to 52 is roughly about 11% increase in 9 months. Okay. So that's, as I was explaining, that's a better way to look at it, because in the previous year, if we see September versus December, in December we have normally around Diwali is when we pay out normally our performance linked incentives. So there is always a slight bunched up lumpiness and a quasi Diwali bonus component which comes in that. So it bumps up the December quarter number. You can always see, traditionally you can compare December with September, in any of the years. So that is something that I would like to kind of just reiterate that aspect. Now, coming to the management's remuneration growth. So actually, if you go back and see the last 4 years, the promoters and directors actually have not taken a salary hike in last 4 years. We actually, when the company's cash flow and investment need was there, we've actually not taken a salary hike for 4 years. So in a way, one correction of that is due now that times are better. And secondly, actually, if you see the absolute numbers, those numbers are ridiculously low compared to anyone's.
No, I surely appreciate that, Hiren. So I am with you, and I really appreciate for last 4 years, management remuneration has not been changed. So that is surely appreciated. What I was trying to understand, so nothing against what is being done, but typically, is it a pointer that now probably we are through with a lot of burns and somewhere this is going to stop maybe in a quarter or so? So basically next year onwards, is this an indication that you feel next year can be a really good growth year in terms of revenues? Because you are taking this after 4 years. So I was trying to understand from that perspective.
Sure. No, I'll also, so there was one other question that you had which I wanted to address, which was regarding recruitments and further increase. So two things are there. One is, as we all have been reading and all of that, there is at this point, overall cost pressure on people cost front across the entire corporate world. And to that extent, even we are not isolated from that. I would say, have reasonably managed our cost structure. In fact, if you go back to FY20, the number was higher than this FY21 March number. So actually we scaled down on our costs, and given the current run rate, I don't think in FY22 also we'll cross FY20 employee benefit expense. That much we have managed the ship, with relatively tight cost structure. See, but ultimately this is a people-based business, and we need to, obviously have great talent to drive the growth of the business. And as we actually expand into newer, horizons, newer digital media, etc., that aspect is bound to happen. So continuous addition of people, key people, or mid-level or whatever is a continuous process. Our overall target is that we look at each business's AOP and see what it can support, and accordingly we look at what is and people costs, etc., and accordingly we look at how do we bring the new talent within that structure. Also, as a part of that, we also have taken the shareholders' approval for the ESOP plan, because that will also help us in both attracting good significant talent and also retaining some of the key existing talent through and not just retaining, giving them a great participation in the company's future. So that is just to answer your third question on whether this people cost is kind of plateaued out or not. I think overall this year entire corporate India is facing this challenge on people cost, and that I think will definitely be there for us. And in fact, ESOPs has been also created to help us deal with that in as good a manner as we can. But to answer your third question or last question about whether these are indicators of, I would definitely say, as I said earlier, that now that we have the operational cash flow and performance has improved significantly, we definitely felt that this was a time when we could at least correct our remuneration to to more better levels, at least not yet to market levels, but at least to better levels. So definitely there is a impact of the operational improvement on that.
Thank you. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, thank you very much, sir, for the opportunity. So you mentioned about the break even in the next financial year. So just wanted to clarify, you mean the entire financial year will like at what point in time are we looking to break even the next financial, like by mid next financial year or by the end of the next financial year?
Well, while I am not in a position to pinpoint the exact time, but if the aspiration is that in the first half we hope to do that, but right now, given that it has too many moving parts and dependencies attached to it, I'm a little hesitant to kind of commit to a timeline on that.
Okay. No, fair enough. Understood. And my second question is on your revenue side. So by when are you looking to reach a pre-COVID kind of 500 crores top line? So is that what we are targeting maybe next year, or any comments on that?
So as I was explaining to one of the questions, replying to one of the earlier questions, that basically there is a change in the business model. So this whole syndication pie, something that we have consciously defocused, both in terms of the management focus as well as in terms of the capital allocation, and rather focused on investing in the B2C aspect, which is all the various. So one is television channels, and of course the other is the digital Shemaroo part, and so in that sense, it's a conscious effort to actually take or not really chase that trading revenue for the sake of top line, rather build a much more loyal audiences, recurring, more predictable and stable revenues on the B2C side. So to that extent, right now, we are not chasing that number. I mean, we are hoping that over a period of 2-3 years, we'll be significantly higher than that. But whether that number, when it will happen, is not something that is my current goal.
Okay, understood. So that's it from me. All the way best.
Thank you. The next question is from the line of Nitin Sharma from Money Control Research. Please go ahead.
Yeah, hi. Thanks a lot for letting me in. 2 questions. First of all, we would like to understand that the sequential fall in the digital revenue was the growth in sequential revenue in the digital segment was quite tepid. Can you please talk about what went on there, and then I have a follow-up.
On digital media, you're saying?
Yeah.
So it's been 20%.
No, sequential. It was a percent, right, compared to September quarter.
Sequential, actually, there is a level of seasonality over here, so I would actually not be too. In fact, this is something that we have always discussed even in the past, that as far as digital media is concerned, in fact, overall, because media has its own seasonality of across various parts. So, we actually don't look, compare it on a sequential basis.
Okay. Well, so I have a follow-up. Just would like to know what was your digital media breakup, as you always give each quarter, and also can you please talk about your OTT business, Shemaroo. I mean, if subscriber numbers are rising, if yes, at what rate? A number would be helpful. Thank you.
Sure. So at a broad level, YouTube is probably now approximately 2/3 of the digital media revenue, and the rest is split between now telco business is below 10%, and the rest is Shemaroo and other syndication business.
And on the OTT subscriber on Shemaroo, any term?
So right now the base is still building up. I can say, I mean, on low base we may, if I give you some number that we grew by so many, 100, 200%, it really doesn't make too much sense. When we reach a certain critical mass, we'll be happy to share the numbers.
Fine. Thank you.
Yeah. But directionally, I can say that all the consumption metrics and the subscription metrics are quite positive and strong. At least that much I can definitely say. We are Definitely seeing extremely good user engagement. We are seeing very, very good completion rates of our any fresh content that we are putting up. The minutes of usage, etc., has been broadly on an upward trajectory.
Thank you. The next question is from the line of Siddhant Mata from B&K Securities. Please go ahead.
Yeah. Hi, Hiren. So two questions, sir. So first of all, just the previous questions you told about 2/3 of the revenues coming from YouTube, 10% around telcos. So less than 10%. So around 25 to 30% coming from Shemaroo and other businesses. So because in your new media revenues you have you include the television business also.
No.
So that is traditional business.
Yes.
Yes, sir. And secondly, sir, one more thing, sir, because we haven't been seeing genre ratings, we have been seeing the BARC ratings as per the state or the area wise from the free ratings which we have access to. Before that, we used to have genre ratings. So I can't see Shemaroo Marathi Bana on the earlier there used to be Marathi Free and Marathi Pay, and in Marathi Free I used to see Shemaroo Marathi Bana always on the top first and second. Now because it's a region wise, there are Hindi channels and Marathi channels both mixing up together. So how is Shemaroo Marathi Bana's performance been through in the genre specific, if you have the data, and how has Sun TV Marathi channel performed after its launch in October?
So, Shemaroo Marathi Bana in the Marathi movie category has been, both in terms of its ratings as well as ranking, been stable. And Sun Marathi has opened, I would say, at a acceptable level, but it has not made any dent in our ratings or affected our consumption as of now.
Okay. So I don't remember, but used to be number 1, number 2 in Marathi Free. With I think so. First Marathi being the number 1 channel and you being the second number channel. Is that the similar line which I can see, or is there something which has changed?
So now in the free market there are 4 Marathi channels: Fakt Marathi, Zee Chitra Mandir, Sun Marathi, and Shemaroo Marathi Bana. Fakt Marathi continues to be a largely movie-based programming channel. While Sun Marathi is a GEC, and Chitra Mandir also in the last I would say 3 months changed its programming to GEC programming.
They've added a lot more GEC
programming. But
it started as a movie channel. It's a movie feature.
But in the last 3 months, it has added a lot of GEC programming, which is leading to its growth. The viewership is coming on the GEC content. In the movie space, it continues to be Fakt and us, and they're largely both stable, little up, little down, that kind of.
Even we alternate also.
Alternate, yeah. The gap is not too much, and we keep going up and down between the two of us.
Okay, so Zee and Sun haven't, Zee, Chitra Mandir and Sun Marathi haven't dented your ratings.
Chitra Mandir's ratings are higher than both us and Fakt Marathi, but Zee Chitra Mandir is in the process of transforming more into a GEC than a movie channel. So
then that happens.
Basically, so Zee Chitra Mandir is still a quasi movie and Marathi combo. Sun Marathi is a pure play GEC. So if we were to break it into genre, as you were kind of saying, movie and GEC, then it's Fakt and us.
Okay. Because now we can't, because the data isn't freely available, so I just wanted your inputs. But that's not an issue. Thank you so much.
Yeah.
Thanks, Ethan.
Thank you. The next question is from the line of Rohit Trivedi, an individual investor. Please go ahead.
Hi, Hiren. Can you hear me?
Yeah, I can.
Thank you. So Hiren, as you said, there are three components to our revenue: subscription, advertising, and syndication. And advertising, as you have said, has grown more than 35%. And my question is about then subscription, where the answer was either not clear or I wasn't able to really understand it. So subscription would be Shemaroo Me largely, and it would be around 25% component of the digital pie, which has grown by 19%. Does that mean, and YouTube, as you have said, has grown very well. Does that mean that overall Shemaroo Me hasn't performed as much as we expected in terms of revenue? So it may have got the users and watch rate and everything, but in terms of revenue, it's not performing as well as we expected. Although earlier you alluded that we are putting a significant amount of investment into that, close to out of 20 crore, I believe, a significant amount would be going to Shemaroo Me. So what is overall picture of revenue, user growth rate and subscription growth rate in Shemaroo Me, and how the investment is going forward in that direction? Thank you.
I think you mixed up a couple of answers which I was discussing. So first I want to give the revenue breakup for new media or digital media, which is, as I said, roughly 2/3 is YouTube, 65% is YouTube. Less than 10% now comes from telco, which at some point, the reason why I'm giving it separately and in this manner is that at some point telco was 50% of the revenue, but we've absorbed that that fall in the telco revenue. The rest, which is a combination of Shemaroo Me and syndication revenue both. So that's the breakup of the digital media business. Now, the question that earlier was asked was for traditional media, where advertising revenue has grown by 37% or more, kind of a thing. Or even if we look at overall ad spend actually in India, then the ad spend has, because of the low base effect, grown by 37%. Now, there if I were to look at it at an aggregate level of the company, then we have three businesses or three sources of revenue models, if I have to put it. One is subscription based, one is advertising based, and third is syndication based. Now, when I further look at subscription based revenue, Shemaroo Me is not the only one. In fact, it's there are others, like DTH is a subscription based revenue, and there are a couple of other subscription based revenue streams also. So all put together, what I was trying to say is that the revenue on subscription has degrown compared to last year. Now, when we look at Shemaroo Me specifically, actually Shemaroo Me was launched in April only. So last year we had hardly any subscription revenue on Shemaroo Me. So there is no base comparison available itself for Shemaroo Me.
Right. So can you then please, Hiren, talk more about Shemaroo Me, that what is the trajectory in terms of investment that we are doing? So a bulk of our investment, is it geared towards Shemaroo Me, or is it equally spreaded between the television channels and Shemaroo Me? Because it seems that television channel would break even in the next financial year, while Shemaroo Me seems to have a longer time horizon in terms of investment.
Yeah. So Mr. Trivedi, as I said earlier, even now the bulk of the investment is towards the television channels business, and the way to look at it, while I'm not in a position to give specific numbers, but philosophically or strategy-wise or policy-wise is something that I shared earlier, but I'll just repeat it for the in case one has not fully grasped it. So basically, what we do is we look at what is the investable cash flow available to us, A. on the other hand, what is the business plan need for investment, and third, obviously, what is the big picture that investment that this business can support in terms of scale or potential. So based on that, something which today, if it is say at a revenue of say 10 or 20 rupees and has a potential of 100 rupees, I'll not go and invest 200, 300 rupees to generate 3 or 5 years down the line a revenue of 100. So we, to that extent, have would cap that investment on that business's potential based on the business's potential, and at the same time we would look at what is the cash flow supporting for that business. So all put together is what that individual business's investment trajectory is kind of decided.
Thank you. And I've got a very short question about inventory. May I?
Yeah.
So we haven't got the kind of right inventory number at the end of 9 months. We have got it kind of right at the end of 6 months. So can you kind of right please talk about inventory figure, and has it increased or is it at the same level? And where kind of right inventory investment is more going forward would it be? Would it be in Shemaroo or kind of right traditional digital channels? Traditional television channels?
Mr. Trivedi, the inventory has come down from 706 crores of September to 700 crores.
Okay. And going forward, kind of right, inventory investment, would it be more for Shemaroo or the television channel, or how would it be splitting kind of right going forward, if you can tell me? Thank you.
No, it would be both. I mean, each of these businesses have their own fundamentals and their own need for content and investment, and it would be both. So I cannot right now break up or say that it will be more for this or less for the other.
Perfect. Thank you.
Yeah, thank you.
Thank you. The next question is a follow-up from the line of Shikha Mehta from Q3 Capital. Please go ahead.
Hello, sir. Hello. Am I audible?
Yeah.
Yes, ma'am. Please proceed.
Yeah, I just had a couple of more questions. A follow-up to the previous participant's question about inventory. If you could just give a ballpark figure also of how much inventory is blocked in new initiatives and how much we have otherwise.
I'm sorry, but right now I'm not in a position to do that. But yeah, I mean, all I can say is that over a period, the new initiatives will be less lower on inventory.
Okay. And also, I assume we're still maintaining an IRR of 18%. So if you could just give even a ballpark guidance on when we would be able to return to, say, 70 crore or PAT where we were earlier.
So, Shikha, if you actually see the EBITDA margin, or the EBITDA net of the investments, we actually are already at that level, right? It's that cash flow that we are taking and investing in the new initiatives. That is what is kind of giving you the impression that we are not generating that IRR.
Right. So again, to reiterate, our IRR is at 18% or north of that, right?
Yeah.
Okay, great. Thank you.
Thank you. The next question is a follow-up from the line of Dwanil Desai from Turtle Capital. Please go ahead.
Hi, Ren. Just two more questions. So first, I wanted to understand, since we are not trying to defocus from the syndication business, what happens to the perpetual inventory that we have on that account where we don't have digital rights? How do we treat that, and what will happen to that?
Where we don't have digital rights?
No, I mean some older content where we may not have digital rights, only TV rights or anything like that.
I think it will be less than 1% of less than maybe 5% of the inventory.
Okay. And the content where we have both the rights, but since we may not be then, kind of doing the syndication for the TV channels.
No.
And
So, see, I understand the thing. We will not lose a revenue opportunity to generate the IRR. There are two questions here. I have an inventory where I own either perpetual or even say period rights. Now, if I don't have a B2C monetization of that content, then I will definitely look to syndicate that content. So I'm not averse to, even in last quarter we continue to have television channels deals for for that. So, but that is only out of the core from the existing inventory.
Right. You will not acquire new
limited
inventory for that.
in terms of capital allocation. It's not that even there we will not invest. We will invest, but if I was investing 100, now that investment has come down, significantly, maybe less than 50, maybe 30 or thereabouts. That's the only difference. I'm not, why would we lose a revenue opportunity?
Understood. Completely understood. And second question is, with respect to your content strategy, both for Shemaroo Marathi Bana and for Shemaroo TV, any new content to be launched, anything that we are trying to do to increase viewership, get more pull, if you can talk a bit more about that.
So there are a lot of experiments as well as initiatives that are continuously on. We do it on a continuous basis. Just to give you an example, we launched Korean dub shows on Shemaroo TV dubbed in Hindi. Now it was almost, you can say, probably for the first time that Korean content dubbed in Hindi has been launched on television. May not be first, but one of the early movers, I would say. So what I'm trying to say is that these are experiments that we do on a continuous basis because that also keeps the excitement of the audiences, the connect of the audiences. It gives us more talking opportunities, and no one knows which is going to be the next big hit. So it's something that innovation or change is literally the only constant or the name of the game, and that's something that we keep doing. So I just give you one example. So I'm unfortunately not able to share my forward slate on that, but all I can say is that our team is continuously on this whole innovation or experimentation, and something that works we continue or scale it or expand it. If it doesn't work, we scale it back, or all that is something which is literally on a continuous basis.
Yeah, Dwanel, I also wanted to add that our audiences are also continuously changing in terms of their consumption behavior. And we believe that we can catalyze some of that change for them also. So hence, actually, we do a lot of experimentation. At the same time, they are very cognizant and P&L oriented for our investments, experiments also. So we do it in small measure. We see and monitor closely how it performs and then decide to expand it. And I think the rating gain that we have seen on Shemaroo TV is a payoff of some of the experimentation that we were able to do and gain loyal audiences and differentiated actually content also on the channel. So yeah.
Okay. I was trying to understand more like the recently launched channel Q. They are trying to bring lot of digital stuff onto the TV. Any such initiatives or more originals on Shemaroo TV? Any thoughts around that?
So, Dwanel, we studied the channels, and what we also did is that the appeal of a lot of that content when we studied the audiences was coming from the kids segment, plus some things. So, anyways, that is one way to do it, and we will also experiment
we've been
with
continuously
various
experimenting, in fact, and all I can say is, as I said, that I'm not able to share the forward slate of, various content offerings because obviously, as you can understand, it's a little confidential at this stage.
Okay. Got it. Thanks a lot.
Thank you. The next question is from the line of Rahul Jaintilal Jain from Credence Wealth. Please go ahead.
Thanks for the follow-up. Here, just with regards to the inventory part, so you mentioned the current inventory is down to around 706 crores almost flattish compared to last quarter. But going forward, how do we look at?
It's down by 700 over 706. Yeah, flattish, but yeah.
Flattish. That's fine.
But all I want to say is that
it has remained stable.
Come off, or it has been coming off.
Right. It has remained stable or it is coming off. So typically next, say, 1 or 2 years, how do we see the inventory level and say compared to the revenue? So on one side, do we envisage reaching a revenue level of say 500, 550 crores and inventories coming down from say 700 crores to around a similar level of revenue? How far that could be?
No. So if I have to, I said this earlier also that I believe that our inventory has peaked long time back. We have been on a downward trajectory. We were probably at peak, we were upward of 750 crores of inventory. Maybe, I don't remember the exact number, but probably somewhere upwards of 750 crores. Over 2 years, we brought it down to, not even 2 years actually, probably less than that. We brought it down to 700 crores, and directionally it is going to be downward. Now, what is the speed of going down? For now, at least I am not in a position to, predict that.
Okay.
Yeah.
Sure. Thank you. Thanks.
Yeah.
Thank you. As there are no further questions, I now hand the conference over to Mr. Hitengara from Shemaroo Entertainment Limited for closing comments. Over to you, sir.
Yeah. Thank you everyone for joining in for the Q3 earnings call, and we hope that everyone stays safe and stays healthy. Looking forward to a great next quarter. Thank you and all the best.
Thank you. Ladies and gentlemen, on behalf of Shemaroo Entertainment Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.